It's the pre-market ritual you never knew you needed. Get ready to gap and go with the Calum Trading Institute.
All right, guys, welcome to another episode of Gap and Go. Let's just get straight to it. Probably the most talked thing today um, is Doge. So I think last week we were talking about, there's really two camps, right? 2 weeks ago, we were talking about the camp of two things, right? One is Doge or savings, and then how big of an inflation impact you'd see. And then the other part was that, when you had tariffs, tariffs are also inflationary in nature, right? So there's two camps that the market is pricing in. Surprisingly enough, if we're looking at price action, it looks like, the camp of Doge is winning right now. In fact, I stole this chart maybe 45 minutes ago, and I found it very interesting. So this person really illustrated the type of inflation impact that you might be seeing with regards to 100 billion, 200 billion, $600 billion cuts per year. And just to let everybody know, official data was that in the first 5 weeks, Doge has actually saved $65 billion already. So the target is $4 billion for everybody know, $4 billion a day, which is close to more than $1 trillion a year. Right now, I think it's sitting at $1.5 billion. So probably a lot more to come. Jason, Bri, share your thoughts.
Well, for me kasi consensus is Doge will not make a dent. That's why I'm keeping an open mind. And also Elon Musk is there and he's a doer, man. Diba?
So I think I think the market is pricing in actually the impact.
Yeah, but that's why I think the market can move, depending on ano. Kasi parang tingin ko maraming skeptical kayo sa Doge, diba? And I guess on the macro standpoint, no, so this is how important the government is, diba? 20 to 25% of the US GDP is the US government. Tapos, if you add the state and local spending, that's around 36 to 48%. I asked Grok. Right? So that's why this matters. Diba? And we all know that in the past few years, diba, it's the really huge fiscal deficits that have been boosting the US economy. Diba? So I think now there's this concern that, okay, this, along with the other stuff Trump is doing, tariffs and all those things, might slow down the US economy. Diba?
And that's what looks like the market's pricing in, right? I mean, GDP levels, growth, unemployment also expected to skyrocket with all the layoffs that's been happening.
Yeah, and also I think it's important because parang tingin ko dito naka-price in just starting to Kasi everybody believes that, Trump will pro-growth, MAGA, US exceptionalism. Yan ang tingin ko mostly priced in
This will fire back.
But well, of course, if they are too successful, then, baka I don't know, the market could really have a huge volatility. Diba?
Right, sorry, you're going to say something?
Yeah, much of the things that is being corrected or unwound by this Doge is the excesses of the past administration, which have we've seen that $1 trillion spent even after COVID, diba? After COVID has been resolved already. So yung mga Inflation Reduction Act, spending trillions on that. Tapos Ukraine war. So much of the things that was done there has really contributed to a lot of things that we don't understand that's happening in the market. Kasi mga fiscal dominance, mga recently lang natin na experience, diba? So much of the economic usual metrics that or intermarket analysis that we expected to happen never happen because of these excesses. So this is being unwinded by this Doge thing. which is very good because like right now you see your bond market, your long-term bond market is already discounting this unwound, sorry. So it's very good for the market actually. But in the short run, we might feel some pain, which Elon Musk has warned the market already, even before December, that whatever they'll be doing will be painful in the short run, but very good in the long run. And for us also, for the Philippines, so sana if it becomes successful, diba, it could be an example to other
right.
governments also.
But um,
It's a nice try. Nice try. Sige.
that's the thing, right?
Hmm.
Again, there's always repercussions to whatever's happening, right? There's always good and bad. So meaning, let's say you cut down spending and all these excess workers and everything, obviously you'll cut down some form of consumption that is also happening within the local economy, right? And I think that's the part that's also weighing on consumer sentiment and on the equities market, right? Okay, inflation, we're cutting down expenses, we're cutting inflation, but be prepared because that's still 20 plus million federal workers, for example. You cut
Yeah.
down another 5-6 million, that spikes up unemployment. I think Jason has the data with regards to federal employment of total workers, right?
I don't have the number, but here's what I have. The average salary of the government worker is 120,000,
Which is a lot.
which is
Yes.
like double the private sector.
Mm.
So yeah.
They're the biggest employer of last year, for
Yes.
the past 2-3 years. So parang it's synthetic, the strength of the
But don't forget that's consumer spending, that's being. I mean, I'm not saying it's not going to be gone because obviously they get a whole package for like 8 months. I think malaking retirement package lang, diba? I think the thing here is that these are cause for concern going forward. What's going to happen next?
Yeah, even the 100-year-olds, the 20 million 100-year-olds
Social Security.
who've been getting the paychecks every year, every month pala. So
Gastos yun.
that's a lot. But whether it's fraudulent or not, it goes into the GDP, part of it, diba? At least part of it goes to the GDP.
No, it is fraudulent. I think the point being here is that even if it's fraudulent, it does, like what you're saying,
Oh.
go into the real economy, diba?
So if you cut those, diba, definitely it affects the GDP.
Parang pogo lang yan. Tinanggal mo,
Oh.
na walang spending, diba? Maraming tinamaan. I'm not saying it's not right or wrong. Obviously, that's a different answer. I'm just saying, if you look at it from the US perspective, it's also similar. You're cutting all these excess spending, which is correct in nature. You're just, the market, what I'm just saying, might get ahead and already anticipate these things. And that's the reason why we're seeing a relatively weak market across the board. I think this is just like a preview of what we're going to be talking about with regards to the equity, right?
Well, the good thing about it is it makes the financials of the government, the Treasury, US Treasury, at least a little bit better. That's why you'll see the long-term bonds discounting it already, lowering the possible interest rates required to fund this the government spending.
Well, yeah, that's the parang long-term impact, diba?
Mm.
You're fixing the finances of the government, I guess, putting the debt on a more sustainable path.
Mm.
But I think in short term, a bearish scenario could be they catalyze a huge slowdown. And actually, there's a scenario that can blow up the deficit even more. Kasi if you make a huge, big slowdown, bababa yung tax receipts, react yung deficit. So I think they have to do it in a strong economy, like what we discussed last week.
Yeah. And I think this is the important part, right? Again, 30% of refinancing, like what we talked about 2 weeks ago, is supposed to happen on the 30 plus trillion, 37 trillion. So that's close to $10 trillion that is up for refinancing this year. And like what we talked about 2 weeks ago, nobody wants to refinance at high borrowing costs. And so hopefully this thing comes down
Is there a
faster.
deadline? Is there a deadline to?
It will not come without shocks also to the real economy. I think that's what we're shocks to the real economy and to the stock market. I think that's what we're trying to talk about today. Okay, good. Okay, let's just go into the stocks. So again, point being here is that systemic risk, non-systemic risk. If I look at it, so far, parang there's nothing systemic yet, right? But can we see a larger than expected sell-off? Might be, but markets have been channeling for quite some time. So what are you guys seeing underneath the surface?
I think the only difference now, it looks normal if you look at it like just a normal correction to the channel support, diba? But if you put in the context of what's happening, what's being set up, kasi the DOGE thing, the tariffs and everything, parang it's being set up for a major correction. Those things are new kasi. So parang again, what we talked about, short-term pain muna, cutting a possible cut in the GDP. Diba? So could start a major correction, but not necessarily systemically bad. Diba? Not yet.
I think maybe we should also discuss yung recent developments in yung NY Fund, right? Kasi parang diba Satya Nadella, talking about we have to be a little bit cautious with all this capex, diba? Because baka it might not generate returns in the kagad. I think very healthy, valid points. And to me, parang just correcting this AI hype over the past 2 years, diba? Na parang putting in some realistic expectations.
Okay, so forecast for this year is 12 to 13% EPS growth. That's not really a high benchmark for some of these Mag 7, right? It's that, biggest question mark is that if you're asking me to spend $70 to $80 billion a year, we gotta have higher than 12 to 13% EPS growth. I think that was the point of Satya, right? So meaning, and the reason why is because whatever we're spending in total capex has to translate into higher GDP growth over a long period of time. So if this AI hype is really real, there has to be some value to it. I think that was his point.
Yeah.
But they're still spending, right? I think they're just, what's the right word? Managing expectations. Minamasahe lang yung which is for me is good. I think he did the right thing, right? Instead of trying to create a exaggeration here where he could have said, okay, AI is booming, it's going to be the next big thing. We're planning for the future, and we think it's going to be a 10 times full type of environment. He could have said that, right? And try to, hype up expectation, but he didn't. I think he did the right thing. And that's the reason why it's very difficult for me to expect a bigger sell-off. That's my problem. Meaning, I just don't see any excess that has happened in the equity market. Is it deflating a bit and lowering expectations? I agree. In fact, 4Q EPS is downtrending a bit. So I think last quarter was 12%. This quarter, I think, is my 11 point something. So it's still growing. I think the point being here is that, like what you always say, Jason, the what do you call that? The pace, the rate of return, it's just falling. I think yun lang naman yun.
Yeah. And I think also what I've read also kasi is that at this phase of yung capex, it's already starting to impact yung free cash flow. Right. So I guess it's a little bit malaki na rin siya in perspective, diba? So of course, if does it generate returns in the near term, of course, expectations will get dialed down talaga.
Under the hood, if you look at the theme issues, lahat sila almost yung mga space issues, di ba? Yung mga rocket lab, going through this 50% correction. What's left is ASTS, di ba? Rocket lab, di ba? Robotics mo, everything is so bad corrected in the US. Only in China lang malakas. Tapos yung mga AI mo, yung SoundHound, used to be the darling of this market.
I think
Close to
Great.
being zero sum.
It's great. I mean, wala talaga laman mga to eh. Diba?
Yeah.
At least you unwind the hype on all
Yeah.
the speculative assets, diba? Because these guys don't generate any type of cash flow, right?
If you're looking for the excess, I guess it's in these theme issues. Dyan lang sila.
Okay, so that question about, you're talking about these things, right? But has that really been across the board, right? So when I look at like IWM, parang wala eh. Or like, even on the other S&P, na 493.
yeah. I think
I mean, yes, there is some type of speculation that has happened. I'm just saying now, it's not like before or like in 2021,
No, it's
parang broad base or across the board. Diba?
I think also may comment ko sa there's a nice article blog entry from Aswath, teacher ni Edmund, talking about the AI space. So sabi niya, I think may impact din yung DeepSeek eh.
Yeah.
Diba? Kasi parang, okay, it showed that, okay, I don't have to spend this much. And, maybe it lowered the barriers to entry. Diba? So that's why parang tingin ko yung mga speculative, the SoundHound, mga software, ganyan, parang na ano talaga yun,
Yeah,
na,
I think
medyo na burst yung hype talaga eh.
But it's good for long term, right?
Yeah. Kasi parang
Yeah.
okay,
Deflating these expectations.
it's easier pala to get into the space. And for the semicon, okay, maybe we don't need that much chips to spend that much, diba? So I think that's why it's the space has really started to deflate eh.
Yeah.
I think that question now is what's left. So I tweeted this mga natira, Spotify, your Netflix, your mga subscriptions, no? Like, yung mga Duolingo, Philip Morris, yun. Parang if pagtapos ka na mag-hallucinate, diba? You try to go back to the basics and those things are what's left. So, and even the apparels and clothing, yung mga used to be the angels, diba?
Nike.
Deckers.
Pabalik na sa Nike na nga.
Nike na.
It's just differences in valuation. I think that's just it. And the market just recorrecting everything that has been happening so far. And today, night post-market, I think everybody's waiting for NVIDIA earnings. So this was also a question. Is it priced in? Maybe, right? But I also said something, NVIDIA has CapEx of $2 billion, right? They did $80 billion on that 2 billion CapEx. So they made 40 times return in a year. Tell me $2 billion, and this drops to $60 billion going forward. That's still a 30 times return on everything that you spend on, right? In a year. I mean,
how much of it is priced in?
Find me a business that's giving you cash flow in return such as this, and I'll tell you the answer is zero. So yes, you could see some deflation happen, but I'm just saying from a business standpoint, like they're just a money-making machine. So maybe not worth the $3 trillion price tag that they have, but my point being here is that these guys just make so much money, and sometimes deflating the expectations is actually the right thing. But when I look at it, looks like a distribution. But anyway.
Yeah, I think that's the story of this month. Yeah, most of the tech issues are being in the distribution phase. Okay.
Yep. And that's where your Mag 7 is actually weaker than your S&P, right?
Mhm.
Okay, let's maybe jump into emerging market and uh, dollar slightly coming down, supposed to be good for emerging market. Now it's a risk off. So EM might not be painting the proper picture because all of this has been the biggest winner so far has been Hong Kong and China. Um, Valuations of China itself, 7 times PE. Uh, Not the tech, I'm just saying China itself, 7 times PE. Growth maybe still in question. But good part is it's the tech space that has actually benefited the most so far. We're looking at 1-2% interest rates, cheap interest rates, valuation still very much attractive. Now you're starting to see high single digit growth. I think that's what's being priced in for some of these issues like Alibaba. So, and then now this story about innovation, tech space, like what we mentioned 2 weeks ago, China is not that far behind, and it continues to play out that story. Um, you think this still has legs, or what's the?
Uh, well, you just look at all the fundamental stuff, yes. But I guess what you have to be careful with China is really the government. Pwede magbago anytime. But I do think they're at a mode where they're supporting the industry for the next few years.
Mm.
Because they needed it.
And if you look at M1, M2 supply, it's been growing fast. I just don't have the chart. I saw the chart. I just did not put it here. I should post it for next 2 weeks. I mean, if you think about it, we're just following liquidity and following the money. And I think this is the best exemplary of how liquidity can lead to a better stock market. I mean, timing is everything, right? You need to have the right components, and then you turn on the faucet and liquidity gap to support the economy. And I think the timing aspect, which I will get to in a bit with regard to the Philippines, China is actually very good at doing that.
Yeah, I think price action wise, I think this one will be on I think based on base per base, it's going to be on a base per base way, ano siya, by stages. But not necessarily gangbusters na tuloy-tuloy siya. Only because if you see what happened last month, yung malakas na move, I think it's more of a short covering thing, aside from it being really undervalued. But I think in the next few months, if this is going to proceed, price action wise, my bet is at least it's going to create bases first before then proceeds, then parang staircase, because there's still doubt in potential higher digit growth setting. Although we've settled that the government is supporting the market, but the growth part is very still in question. If it's a higher digit or higher double digit or lower double digit. So expect a more of a base on base kind of movement.
I think it's the hardware space that really affected everything because even traditional manufacturers, I mean, you look at Thailand, murder in the streets, Indonesia, also murder on the streets. And I love your face, Brian. And
That makes me feel good about the Philippines kasi.
that's we're talking about, right? Everybody complains. I'm sorry, they're not wrong, right? But everybody's complaining manufacturing, bakit walang manufacturing sa Philippines? Walang agri sa Philippines. We're net importer. Yes, I understand that's the challenge, right? But I'll tell you, lahat yan, walang laban sa China. right? Thailand closed down 40 plus factories. Indonesia closed down, I don't know how many factories also in Indonesia. Point being here is that China will always produce it cheaper. And look at all the automobile parts for Thailand last year. All of them, most 45 shut down last year because most of them cater to the traditional ICE, right?
Kasi si Blay, dark factory of China.
Yeah.
There's
So
no lights because
Robot,
don't
no lights, no.
robots don't need lights.
my point being here is that China is able to produce all these things at cheaper prices, right? So how do you compete? I mean, at the end, well, Philippines is just lucky. I don't know how lucky we will be,
Sobrang
but
swerte pala.
lucky because all the employment that came in was the 1 million, 1.5 billion virtual assistants working for all these brand social media accounts. Maswerte lang, magaling lang talaga sa social media mga Pinoy. But if it was the manufacturing sector, it's scary. And I think that's why you're seeing, this is no joke. Like the sell-off that you're seeing in Thailand and kala mo tapos na eh. And then they drop another 3.5%. And this is on top of a weaker dollar. Let me be clear. This is not on a strong dollar. This is on a weaker dollar. Something
It's a
is
China dumping.
so it's China dumping everything all over the world. And
So our weakness becomes our strength, our opportunity.
we're just fortunate because we just get to buy things at a cheaper price, especially from a net importer perspective. But you're complaining that our stock market sucks. Look
I
at
think
Indonesia.
China exports more to emerging markets today versus the West. So sa atin talaga napupunta yun.
I mean, better for the consumer.
Yeah. But, can't complain about BYD ng ganda eh, di ba?
It's in everything. It's in everything. Like anything that is being produced. Okay, let me just be clear. And I guess that's why you're seeing people, this thesis about weaker dollar, weaker 10-year. Okay, baka may pag-asa ng emerging market. I say yes, that is correct. But I'll tell you, the flows are not going to happen in Southeast Asia. The flows are happening in China. And this is exactly what we're seeing.
I think it's also connected to yung trade wars eh. Kasi parang, okay, nagkakagulo yung mga supply chain kasi because of all that friction and tariffs eh, diba? So I think that's connected eh.
And everybody's saying, BYD is the largest EV manufacturer now in the world, right? So number 2 is Tesla. People are not seeing XPeng last 2 months, the difference behind number 2 and number 3, you'd actually be surprised. XPeng is almost the same size in China sales with Tesla. So it's just a different narrative. But China, higit sana ako eh. LC sign. But but it's just
Number one, China number one.
what you're seeing with China and how fast they've been turn this around. And the funny part is they have the ammunition to do it because 0% interest rates, right? So that narrative switch, I think, if you ask me, I think China still has some legs, right? And I think that's going to be key going forward. They have the valuations, they have the monetary policy, they have a proper master planning for it. Yes, you'll probably see more volatility because they're going to be tariff the hell from everyone else, right? But I think they still control what you will eat, what you will wear, what you will drive, what you will use for your components, and everything from our day-to-day lives.
And also, if the concern is the decoupling from the US, it's impossible, close to impossible. Kasi they're still providing the components for their military weapons, the Chinese. That's why it's really hard to imagine that they'll be decoupling from the US because of this tariff thing.
I sent a video in the channel actually from Bosto eh. Louis Vincent Game. Actually, he argues that maybe China even got stronger, you know, in the past few years because
No,
of
of
Yeah,
the
course,
tariffs.
yeah,
no
for
question
sure,
asked.
for sure.
People forget 13% of global semiconductors actually came from China. I think it was 2002. 13%. Today it's 35%. So my point being is that also semiconductors, and because you're making it so much difficult more for China, and that 35% goes to 50% of things being supplied, I think it's just gonna go higher. I think that's the scary part, right? Okay, so enough about China. Let's just finish this with the Philippines really fast. Um, well, we talked about it. I think the good part is maybe something different. MSCI is coming this Friday. Funny part is it's earnings season. So, uh, for example, like URC earnings is on Monday. I think there's an earnings blackout. So what does that mean? Ba, may chance makabili tayo ng URC ulit. Point being here is because the insiders, I don't think, are allowed to buy because of the earnings blackout. So baka malaki ang gap down. Kasi normally with regards to MSCI and rebalancing, usually they find some ways to support it. I'm sure there's some ways to support it. But directly it's not allowed because insiders are not allowed to buy directly. So things to watch out for, especially for regards to MSCI rebalancing this Friday. Baka we might see some excess, which for me might provide us a avenue to scalp whatever we have.
BDO.
Okay,
BDO Metrobank.
okay, let's talk about this really quick because they asked me about the RR cut. And I gave my 2 cents. I don't think it's wrong because we really need to bring down RR cut. So we're the highest in the region. I think number one is Indonesia at 9%. I think we were at 7 prior to the cut. Everybody else is sitting at 2 to 3% RR cut rate. RR. I didn't say it was wrong. I said the timing is also as important. So what do I mean? Is because the banks are at the best state. BDO made 80 plus billion. Even AUB made what? 11 billion last year. So what I'm saying is that all the tier 1, tier 2, tier 3 banks are just making so much money, right? In fact, where are they making their money is because of the CASA. Diba? So it means in reality, they could actually loan it out if they needed it to. And so what you did is that you brought in more liquidity for the banks. And what will happen here is the banks will just be stuck with the cash and say, sige, time deposit na lang. So point being here is that there's no velocity. And so for me, the timing aspect is as important as doing it. So what will happen here is that the banks will just make a lot more money. And then it will stop there. Nagets nyo ba? So for me, real impact.
You're saying absent, there's a lot of cash, but absence of, say, the demand for it.
Exactly. So just because you brought RR cut won't lead to higher demand. Diba? So for me, there's a timing aspect of everything, right? I mean, if you're doing it, let's say lower interest rates, so you provide better borrowing costs for it, and then you lower RR cut. Okay lang. How can you? I mean, that's just the thing. No, the reason why is because you're trying to create animal spirits in the market, trying to bring back animal spirits in the market. So let's say you're bringing down interest rates cost, diba? And then this starts to rally. And then here, RR cut. Yan, pwede yan. That's my point.
Kasi may demand, there's already demand.
Ngayon, hindi mo na mababa RR eh. Hindi wala ka ng bala for this further velocity. That's just my point, right? So I'm not saying they're wrong. And their intentions are also right. It's just that, when you're doing all these monetary policy, there's a timing aspect also that they have to understand. And we've seen this before, where the timing aspect, and I think China is the best in terms of market timing, all of these things. Like everything that they do to economic fiscal policy, everything is just timed to perfection. Give them the benefit of the doubt, right? I think US is also very good at timing things. So, from a policy standpoint, they also understand the timing, right? They could do an RR cut. That was also being asked. Is it good for the economy? Yes, it's good for the economy. Will it have any impact? I don't think so. So you just have to be careful because these are ammunition. It's like you're shooting a blank. Parang nagsayang ka ng bullet. Right? You have 7 bullets left. 100 basis point rate cut. You shot 2 into the air. Parang ganun yung nangyari. Diba? Okay, with that being said, earnings season is still underway. Property earnings, to be fair, fourth quarter property earnings for the malls were actually very good. SM Prime, 14%. Ayala Land, even in the malls for Ayala Land, up 14%. Election season, up until second quarter, so might be seeing more ayuda consumption spending. That's the reason why even Mondanisin guided for 25% growth, core net income. So these should all bode well maybe in the short term, right? Bad stuff, real estate sales, take-up sales were terrible. I think it's the first quarter where quarter-on-quarter Ali take-up sales were down 5% for their property end. So it's not that we don't know, right? I think David Lichu and Colliers have been scaring the market for the last 3 years in the property market. Nothing really out of the ordinary. Maybe still, I mean, just shows to you guys residential sales will still be poor, maybe lasting into the first and second quarter this year. But consumer, I think, is more important. Hopefully that picks up. And so hopefully there's some level or floor for some of these consumer companies. Anything else need to add? Any other company, guys?
DG Plus.
Well, we've been hearing emergency removal, and it could be DigiPlus that's going to replace EMI from the index because they don't meet the minimum public float. So when was this last happen? Last happened with Avoid This Power. When they did not meet the public float, it was taken out of the PSEI. Wala. Last things about the market. Ano, may pag-asa ba? I think the peso might strengthen. I think this will lead it.
By relative strength in Southeast Asia, I think we have a chance.
I hope so. Might just be a little bit lagged.
Relative strength, falling less. Okay.
Falling less.
But we believe malapit na to. But of course, we've been saying that for for so long.
Oh, earnings investor briefing this Friday. DNL.
Kaya nawala ng buyer eh.
Uh,
Blackout season eh. Wala ng insider buying eh. All right, okay. I think that's pretty much it for today's Gap and Go. We really started with the DOGE and the tax cuts. And the government spending that would have been inflationary, or in this case, disinflationary for the markets. We're trying to measure the size of the impact, so we tried to study what people have already been talking about. I think that's really the meat of today's discussion, and hopefully how that will also translate to you might have that short-term weakness in the U.S. equities and U.S. growth, but long-term it should actually position them better. Because right now, the focus has all been emerging market. The focus has all been China today, how they've been able to reinvent themselves for growth and position themselves better versus everybody else. And emerging market is still in that pain trade. That sell-off that we thought might stop, it's still continuing across the board. And so it's some things to be watching out for. Hopefully Philippines follows less of a pain with regards to emerging market, but these are all things that we are all facing today. Hopefully, like what we all say, inflation starts coming down, so borrowing costs across the entire EM start coming down as well, and hopefully that will actually position the Philippines in a better situation. All right, okay, so with that, thanks guys. I will see you guys 2 weeks from now. If you can join us for the March 7 event, that would be great. I'll see you guys there. Bye guys.
Bye.